Bitcoin breaks all of our level of interest here and bounces off a nice psychological number. Is this the bottom? Let's dive in and talk about it. All right, last week we were looking at these levels here for a bit of a clue to see if we could find support on them and to see if price action here would slow down and look for a potential turn. That didn't happen. We ended up dumping through all of them and finding a base here, or at least a pivot at the moment at 60K. Now we're going to be looking to see if we think the bounce here is done. I have to say that this swift move is a bit concerning. Now, an Elliott Wave, it is just a basic study of price action, and it tries to apply patterns to the price action that is printed here. And we look for outcomes based off that pattern or that PA that is printed. Just by looking here, we can see we have swift moves down, corrective moves up. And I went over this pretty in depth in the last video of what we like to look for in the PA. This kind of move here, corrective move, indicates that there's a potential that the trend is going to continue in the way that it originally came from. Because this swift move is continuing down, right now we have to see, do we think we're going to get some kind of correction up here to one of these levels and reject, just like we did here? Or if we think this is the end and we're going to start breaking up back up above and then correcting back down to these areas of interest as well, or levels of interest, depending. Swift moves typically come in extended waves when they're in an impulse. So wave 1, 3, 5, depending on what we think is going to extend. You can have two waves that extend in an impulse. So that could be a possibility that we're still dealing with some type of 1, 2, 3, 4, 5 here at the larger degree. But we're also looking for sharp moves in A waves where you can typically find them. So there could be sharp move here, A, B, C, X, A, B, C, and then we could get some more further down. Typically, in corrections, the primary actionary wave is going to be sharper than the secondary actionary wave. So far, this has accelerated just as quickly as this has. So there's a bit of conflicting information here in the print that we've gotten, but we'll go a little bit deeper into the count when we dig down the lower time frames. I think the biggest thing we have to look for here at the larger degree is some kind of clues that we're going to be flipping these levels into support and continuing on. And I think the big level right now we have to keep an eye on, and the closest one we have to keep an eye on is 73.7 here. And hopefully we can break back above if we're bullish and flip this into support at some degree. One thing that we have done here is we have broken this level and broken this pivot, and we've come quite deep below it. Typically in price action, when we see a break that's this swift and moves this far away from a level of interest or an area of interest, we're looking for the underside as a potential flip area. Just like we saw here, we have a swift move through, we come back and correct to it, and then we reject from it. That's one thing we have to keep an eye on at these levels, in my opinion. We haven't seen them produce any solid facts that they're going to play as support or resistance at this point and at this time frame and degree. But I'm just keeping them on my chart as a piece of confluence. They're not high up on the confluence list at this point, just because they haven't shown any reaction on the way down. But I'm still going to be watching them on the bounce up. If we fill in something corrective, they will be added to the confluence list and will be added as a piece of confluence to see if we're going to reject from those levels or if we're going to break above and flip them into support. Also, I'm breaking this pivot here. As you can see, we've done the same thing here. At this degree, we've broken a higher low at a larger degree. At the lesser degree, we ended up breaking these and then continuing down to the downside. Same thing here. We broke this degree pivot. Broke down pretty far away from it, bounced back up correctively, rejected, and moved back down. That's another reason that I think 73.7 here is a big deal. We ended up breaking this higher low pivot at a larger degree, depending on count, I guess. I think it's some kind of diagonal, maybe not. But if you think this is some orthodox end of a larger degree count, breaking this, letting us know that this final move up here has completed, and then we could be looking for a deeper retracement to the downside because of this structure break here. So that's what I'm looking for on the weekly here. I'm still watching these levels to see if they're going to play. So far, they haven't played at this degree. We did stop at a nice psychological number here. So this could be the bottom at this point. We still need some more information on this time frame to ensure that we're going to get at least a bigger move up, but still watching these levels to play as support and resistance in the future. With that, let's go ahead and dive into some of the counts and lower time frames. Starting out here on the daily on Bitcoin, this is going to be the most bullish interpretation I can see at this point. We have a nice completed impulse. Again, I went over this a little bit in the last video, so I'm not going to rehash the whole thing, but there's a potential at the larger degree. This looks like a completed impulse, even though we get like this overlap here and it seems incomplete here. Caveat in Elliott Wave is that it's the larger degree takes precedent and the pattern may not be apparent at all degrees. So zooming out, this still looks like an impulse move down with an extension here in the fifth. What we're really looking for now is a turn back up in an impulsive manner. When we're looking at Elliott Wave, we're looking for this kind of pattern to help us find the way that the market wants to move, the greatest strength, and the direction that the market wants to move is an impulse. Again, they finish and complete things, but what we're looking for, since we have a suspected bottom here and we have a bounce up, we really want to see a move like this to give us conviction that the bulls have taken over and the trend has changed. In crypto and in other markets, of course, we see these swift moves and they can be retraced just as quickly in the opposite direction. So is this a direct indication that we're moving away from this pivot and that we're complete here? Still remains to be seen. It's still early. I'll go over a little bit more of what I'm thinking on the direction as well as some correlations I'm looking at, but we have a dump down and we don't really have corrections to offset this. Now, if we go down to the 1 hour, I think the cleanest move here and before Friday, which I was considering was going to happen, but it happened a little too early for me to get in on. I was expecting a general correction up, and I was looking at the possibility of getting some kind of 1, 2, 3 sideways four and a move down here. Again, I'm always looking for the prettiest outcome or the prettiest print from the PA just for clarity's purposes. If I have a nice clear pattern, doesn't matter which way it is. I'm going to try and set up a plan, a trade plan to catch the move or the outcome that I think is going to be produced by that pattern. So clarity is everything in Elliott Wave as well, in my opinion, and in PA studies as well. So it doesn't matter what I think or my bias overall. If I see a nice clear pattern, I have to take that over any feels or anything like that. So what we're looking for is impulse to move up, even at this lesser degree here. We did get a nice bounce here off of the $60 area, but I think it's a little bit sus as to what it really is. This could be an impulsive move just because it is so swift and we have a large separation between these corrections. But I think we still have to see how we retrace in this range. Now, this could still be a way forward since we don't have the overlap, but it is coming down pretty deep. Even if we count this certain way, with this being the 1, 2, 3, 4, 5 somehow, still looks like it's not complete. We would need a nice one more impulsive move up here, maybe to this level, before we get a dump over and a larger internal correction into this range. So, really looking at how we finish in this range, if it's going to come back and correct internally, I'll be looking for that. We really want to see a move back down to at least the 50%, if not the golden zone or the algo area here. Why do we want it to come back down here? That would help us complete or consider that this is some kind of completed motive move and that we're getting an internal correction to the 5618 area. And this is a key area on multiple methods of trading. So the more traders you have on your side, the better. So we do get a move down here. I think that would add a bunch more traders that are potentially taking this here on this retrace because they missed the initial move down here. And that's going to be what I'm looking for as well. Another good reason is that we didn't catch the bottom here, a speculative bottom, in my opinion, where I don't think there was a whole lot in this area as far as my method goes, at least. We did hit a psychological number, which could be considered. Maybe 60 was the area that all the financial institutes and everything were looking to buy it, and we got a bounce here. So anybody that missed out here and didn't get the cloud entry that they wanted is going to be watching this structure here for at least a retrace. And that's what we're all should be doing as well, because we did have a move down and a sharp move back in the opposite direction. So planning around this move isn't the worst idea by any means, but we have to watch how PA plays and wait for it to come to a nice area where the risk reward is a lot better. As always, we're looking for that risk reward trade off. So is it better up here after you get a swift move up, or is it better to retrace more where you can put your stop loss down here, or you have a tighter stop loss where you know you're invalid and can get out more confidently. Again, I might miss the move. I missed this move. I don't really care. I'm a long-term bull, so if as long as we don't go to zero, I'll be okay. But looking for another entry right in this area is what I'm going to be watching for. Even though this structure is a little sus, I'm going to be watching for a move down to this area and a reaction. I'm actually going to wait a little bit for a reaction, potentially, depending on how this prints. If this comes down a little bit sus as well, come straight down, something like that, it's not going to be an entry for me. I'm going to be watch. I want this to come down nice and slow to this area, depending on the time of day as well. So that's what I'm looking for now, and that's what I'm always looking for. And in the end, with both the bear and the bull side, I think that's what we're all looking for. We're looking for an ending of this swift move down here at some degree. It's in some form of a pattern that we can look for a potential impulsive move up and then capitalize off of when it retraces back down into the internal range of that impulse before we get a potential of continuation. And this is going to be at every single degree. The smallest here in this area and then larger up. So if we get an impulsive move up, that's great. We're going to be looking for that internal retracement to even add more because it's a larger degree potential move. Doesn't matter what count we're looking for, bearish, bullish, whatever. This is the pattern we're looking for. Then we're looking for that internal retracement before a potential move up so we can capitalize off of a potential of a break of this high at the minimum and then a hold of this low as well. So that's kind of it on the bullish side. Again, we need a completed pattern here before we even start looking at the all-time high again. I don't think we're there yet. I don't think this is the orthodox end of the move up. I could be wrong. It's all going to be on how we print from here. So that's the bullish side, and that's probably the most bullish count is an impulse down, and that's the same way with that impulse up at the top. And the impulse can be the most bearish pattern as well. That's it for this one. Let's go ahead and dive into the bearish alternatives. All right, here on the bearish side of things, we got the move down. We were looking for a potential of a turn up. That didn't happen, so we have to readjust. Right now, I think we do have some issues in this sharp move down, and this could still be in progress as a move down in the form of an impulsive move. I still think there's a chance that we don't have the swings needed to look for an impulse complete. We're still missing the 4 or 5 at this larger degree, in my opinion. And when we look down further down into the count, real quick here, we get some swings in here that don't quite add up. And the big thing that we have to look at here is this move right here. So if we think this is one continuous move, we have to look at the size of it because if we think it's some kind of 1, 2, 3 in here, we have to look at how big we think this is. So moving this down to something like this, where we actually get a larger wave 3 here by just a little wick there. So if we do count this as a completed impulsive move down, we have to count this as a 1, 2, 3, 4, and an extension in the fifth. And even if with that way, that's allowable, that is a possibility. We just have to make sure that the 3 wave is not the shortest wave in the impulse, which is what it looks like here. So if we move this down, we have to move this, and we get a nice measurement here for an extension as well. So this could be a possibility. Again, we have some things that don't look the greatest or ideal. If this is some kind of impulsive move, we'd go 1, super small 2, large 4, and then our way of 5 there. And then we'd have to build off of that. That would also put us at small 2, big 4, and then the larger degree if this is some kind of 1, 2, 3, 4, 5 down, 2, and then we're looking for we're looking at a super small wave 4 in here. So there's some moves here that we would and some allowances that we would have to make that aren't super ideal as far as the pattern goes. An Elliott Wave, again, you could put some crazy count on here. In the end, it's not ideal, it's questionable. We have to take that into consideration as far as our conviction and if we think a pattern is complete or not. Are we going to allow those allowances and enough where we're going to put our money on it? Or is it fun just to put a little count on here and see what happens? I think the more confident you are in a certain count, the higher the chances you believe it should work out. And that's what I'm looking at here is I don't know for sure one way or another on how this count really should be interpreted. So I'm a little bit sus on it. In the end, I always refer back to my basic baseline. If end up seeing, if I don't know what all this is to the left and I see a nice impulsive move up on the right, I'm going to take this impulse as a potential motive wave in the opposite direction. I'm going to set up a plan to see continuation of that initial motive move up. So that's always the default. As long as I get a clear pattern here to play off of, I'm going to be a little more confident off it and trade it in a bubble and not necessarily consider this. But zooming back out, we'll look at the larger count here. So we talked a little bit about if this swift move is the end of something, we're going to be looking for a move up. Same thing at in the bearish interpretation. So right now, regardless of if we think this is going to be the bottom here and we're moving all the way up, or if we think if this is the bottom pivot here of an initial move down, we're looking for the same thing. We're looking for a motive move up from here, and then we're looking for an internal correction in this range to look for continuation at various degrees. Now, again, if you're super bullish and you think this is the bottom and we're heading back up to $1 million, we're looking for the same thing. And we're going to expect a larger degree move. If we're on the bearish side and we think this is correction and this is the bottom, we're still looking for the same thing. So the bulls and the bears can shake hands on this internal correction here. If we get an internal correction here, we're going to be moving up. The directional bias is the same. That direction being up, but just at various degrees. And we can capitalize off of both of that, and we don't have to be bullish or bearish. We take profit at certain areas and add at certain areas in the move. We can be profitable if it does just turn out to be some kind of corrective move and we move back down, or if it does end up being the bottom and we move back up, we'll be in for the ride. So that's what I'm watching for here, a nice internal correction. If that doesn't play out and we end up rolling over again, then I think this bottom would be considered again, and we would look for the same exact thing over and over again. That's all we're doing as traders. We're looking for patterns of completion, and we're looking for patterns that we recognize to capitalize off of. I do believe that if this does turn out to be some kind of correction, we move down, it would be a prettier look for this to be a completed impulsive move down. So right now it's a little bit, there's some discrepancy in there and all that stuff I went over already. But if we do end up getting one more move down, sweep this low, I think that would be a better look as far as this swift move completing. Again, in Elliott Wave, there's plenty of times where elite Elliotticians have made a count, super confident in the count, and then having that count get blown up. It happens all the time. Then you have to go back and reconfigure everything. So this could be the bottom, and this could just be some slop PA that one person on X is going to figure out and say they call it the bottom. But in the end, we're looking for completed ideal patterns that we can play off of. I don't think this looks super ideal at the moment, so I'm not going to trade it. Still looking for that ideal pattern that I can use as a baseline for a trade setup. But if we do end up moving up here, again, it would depend on where we would complete. I don't think this has the same look as this. Some people could say A, B, C, and we're done and we're heading back up. Could be. I think we have to look at proportion between these two waves. Right now, I don't think we have the same kind of degree waves here. We still have some time for a one-to-one in time, this pattern to play out. And again, in Elliott Wave, typically we're looking for swift moves in the primary actionary wave, and then less swift moves or lazier moves in the secondary actionary wave. So that would give us some more time to look for that kind of move down here. Typically in zigzags, we're looking 3A2 and the 50 for most ideal targets for a wave B. So we'd be looking up in this area here. We have some larger degree support resistance, and we also have this little nubby here that we can look at as well. So if we end up getting a nice correction that way, we'd be looking for a reaction in this area and then a move back down. And even with that, when we're looking for a wave C of a zigzag, we are looking for 618 or a 1-to-1, and that would put us pretty far down. But again, we'd have to see how we correct in here if we are going to continue this larger degree correction and see where we land before we get a pivot to look for our projections further down. But we still have some time in this count. I think we still have potential for this to play out at the larger degree. I think my favorite version of this is the double zigzag, and I don't think this pattern is complete either at the moment. And the swiftness of this move, again, even though we can have a swift move in the opposite direction, it happens all the time. Right now, a correction up here would lead me to believe that we're going to head further down. That's all I'm seeing here on the bearish side. Again, I think between the bullish and the bearish considerations, we're looking for the same thing at this point. We're looking for an end here at some degree, or at some pattern before we get a move to the upside as either a relief bounce before we get a move over to the downside, or for a move to either a deeper retracement or potentially the all-time high. But this is a little less likely at this point unless we start putting in impulses up or motive moves up at the larger degree. But with that, let's go ahead and dive into the correlated asset I'm talking about. Here we are on the correlated assets. I know there's a lot of lines and everything on here, but this is a working chart, so it's going to be a little bit sloppy because I look at this every day and use it in my work. So I'm going to start off here at the DXY, and then we'll move our way around this square here. But basically, what I want to showcase here on the DXY is that we have a pivot here on January 27th, and that kind of this pivot here, or this bottom here, correlates pretty closely to this top. Correlations, depending on what their correlation is, it's not going to be tick to tick every single time. It's going to fluctuate. It's going to fade in and out of being super tight to not being used at all. So just looking for patterns here between these assets to look for, again, more clues in anticipating which direction the correlated asset is going based off the lead dog, if you will. So if you think the lead dog is the dollar, if you think it's tech stocks, if you think it's ES here, it's up to you. It's always good to consider what the lead dog is doing, and then you can see what's going on with the other correlated asset. Right now on DXY, again, I think we had a pivot here. Seems to correlate a little bit with where we get a pivot in the markets here on all these other assets. Depending on how we finish here, if DXY does give one more move up to a potential wave 5 here, we could get one more leg down and then get some continuation up as this rolls over. The only other option here that I see is that we have a wave C complete, and then we're going to roll over from here. And that's going to be more of a tailwind for all the other assets to move up. Again, they may not directly deal with all these, but we're looking for headwinds and tailwinds and things that will help the correlated assets move in the direction, or we can try and figure out which way the correlated asset is going to move based on the direction of the other one. So if this does end up rolling over, I think that would be a tailwind for the other assets to continue their move up. If we get one more little move up here, again, that could correlate to either correction on ES or one more move down if we think that's going to happen here on Bitcoin before we end up getting some relief and heading back up as the DXY corrects potentially. Again, don't know for sure. This could just rock it up, rock it down, and then we would reconfigure everything. But right now, I think this looks like a potentially clean, impulsive move up, at least to this degree here as a wave C or 3. So how we react in this area of interest, which is again a flipped area that I keep an eye on, will determine on if we get a correction here and continuation, if we get a dump, so on and so forth. So that's what I'm looking for on the DXY. Now, when we get to the ES here, this is my main correlated asset that I like to keep an eye on while considering direction here on Bitcoin. And you can see we have multiple areas that meet up when it comes to timing between and BTC, and in reaction to that, Ethereum. So you can see here we get a swift move here. It's probably at the open here on ES, and it correlates here, and we start dropping from there, and then price continues down. Again, I primarily look at this for direction. And as you can see, though, ES came back up to an all-time high, while Bitcoin decided just to go sideways. So you can see the same thing here. After we hit the all-time high, we ended up coming back down. And that's the same kind of time Bitcoin and Ethereum ended up going down as well. In the Discord, we were watching for this broadening wedge to play out. The most recent one, I'm looking for at least a sweep of this level for potential to go back into this broadening wedges range here. Played out beautifully. We ended up bouncing off there Thursday night. I was expecting to bounce on Friday, but it came in a little bit early, so I missed it. But as you can see here, I don't think it's a coincidence that we get a bounce here on ES based off of this level on the broadening wedge, where we ended up getting a bounce off of Bitcoin here at 60 in the same kind of fashion. And then it followed through into Friday, where this ES decided to rock it up. Bitcoin decided to bounce as well. Maybe not the same magnitude, but we got a directional bias confirmed by ES here on the crypto side of things. And as always, as long as ES and the larger market is happy, I think Bitcoin and everything still has a chance to stay up. I think we have to consider where we are in the bigger picture here, and I'm going to move this down. ES is still at really close to its all-time high here, and BTC is nowhere near it. So one thing that we have to consider here, if ES decides it's done and happy with the all-time high, and this has been the pivot up here, and we end up rolling over, I think Bitcoin's going to have a real problem as far as recovering from where it is right now. With this corrective price action here on ES or SPX, whatever you want to call it, this is yes right here. If this, because this is corrective, I think there's a chance we're at least going to get one more pop up. And that for some reason we're biding time here until we end up moving to the upside. This could be in the form of some kind of diagonal or ending diagonal here, but I think we are going to go ahead and go for the all-time high again, which will temporarily help Bitcoin recover. If for some reason we get some nice catalyst and ES starts popping up, I would take that information from here and apply that to Bitcoin and say, okay, if this is going to pop because this has been down so much over the last couple months, that we're going to get a nice slingshot up for at least a larger degree internal correction. Again, that's all speculation. It's just for a pattern I'm looking for. When this whole thing happened in April back here, again, we called for swift move down in my video, swift move down and the potential for it just to rocket up after that. Played out pretty good, and that's the same thing I would expect here. If we continue to rocket back up, I think that would help Bitcoin out and moving up as it did back here. And as you can see, same correlation happened at the larger degree, but these both ended up bottoming at the same time before rocketing up to all-time highs. So I'm looking for the same thing over here now. If Bitcoin or if ES can continue its uptrend and break all-time highs and keep it sending it, flipping this level into support and continuing, I think Bitcoin has a chance for at least a larger degree internal retracement. Now, at the alternative, let's say SPX or ES decides just to roll over from here. That's not going to be great for Bitcoin. I think that will drag us lower. But because this move is so accelerated and so deep already, it's looking pretty bad, to be honest. We might have a chance that we end up trickling down and not doing a straight shot down just because we are so beat up here. Right now, I think there's more of a bearish correlation between these two assets. Basically, all that means is that when ES moves down, BTC is going to move down at a more accelerated rate. When ES bounces, even the sharp bounce, BTC is going to feel it, but at a lesser rate than the ES. So that's what I'm looking for in the correlations. Let's go ahead and wrap this thing up. On the smaller degree, I think both bulls and bears are looking for an internal retracement here to this potential impulsive range. Again, if you think this is a corrective move, then you're looking for more downside, and this is a potential spot to consider that we're doing a 1, 2, 3 or a ABC down here. Something to consider. But right now I'm watching on how this plays. I'm not in a trade at the moment. Watching to see if we end up correcting down over the weekend and how ES is going to react since it is at potential high on the close for the week. But in the end, watching for an internal correction kind of into this area. Further down, the better, obviously, because of the larger risk reward. Buying up here, you have a larger spot for invalidation unless you want to use kind of the algos or something. But this is going to be the main pivot and main spot that we'll be wrong at if we think this is some kind of impulsive move up. Or if this is some kind of zigzag move up, again, this could be an issue where we start looking at a potential flat situation as well. It's just basic trading logic here. You buy low, sell high. You want as least amount of risk with the most potential for reward. So even at a 1-to-1, if we get down here, we get a nice little move. And if it turns out to be something a bit bigger and deeper, then we're along for the ride. But it's all about where you take profit in your trade. And I have a video and I have a chart on X that kind of goes deeper into that too underneath the pinned comment up there. So if you're interested in looking at that, I'll have a picture of it at the end here. Go check that out and watch the video as well. But essentially, bulls and bears are both looking for the same thing at this point. We're looking for a pivot to actually hold here. This could be it. And we're looking for an impulsive move and an internal retracement to capitalize off of. And with that internal retracement, hopefully we're going to be putting in a higher low here, which would send us up to break this high and put in a higher high for a potential trend change. And that's the basics of what we're looking for. Instead of trying to catch a falling knife, price can fall into AOIs and support resistances all day. It's all about the reaction that happens afterwards that we can build off where we have a solid place that we know that we're wrong, and we don't just get a continuation down to the downside. Again, we have to look for ideal patterns to play out to build our confidence. And that's what I'm doing right now. I'm going to wait, see how we correct here. If we end up just dumping down, no harm, no foul at that point. I'll just move the whole operation down and restart over and over again. And that's basically trading and looking for trade setups right there. But at the big level, you have to keep an eye on here. I have it marked here, 74.5K. As you can see, again, we zoom all the way back, it played as support here, and this area played as resistance as well. So watching this again, because this played as support here, even though it's in the short term, solidifies or at least adds more confidence in this level is going to be a player when price action gets a little bit closer to it, whether that's in the form of rejection or if that's in the form of a break above and then a correction to it to find support, potentially in a 1, 2, 3, 4, 5. I think that would be the most ideal look for the bulls. So right now, my eyes are on 74.5K at the larger degree. Smaller degree, I'm looking for an internal correction and to have this to be the end. If it's not, again, looking for the next pivot to see if we get an impulsive move and a correction internal before I move up. Overall, we're still getting lower lows and lower highs until that breaks. Looking for corrections to be pointing up and swift moves down, which means my directional bias at the larger degree, at the most part, is still down until we start breaking some of these lower highs and forming higher lows and higher highs. Confidence to the trend changing. That's what I'm seeing in Bitcoin today. But as always, I'm just rolling with the waves as the price action prints. If you have any questions, thoughts, or different perspective, drop a comment down below. I'll read them all. If you want to come follow me on X, this is where you'll find my favorite entry model here. It's under the pinned comment. So come check it out. If you want to know more about what I typically look for trade entries. Also, if you want to learn more, I would definitely recommend coming over to TDU. You can check out the white belt course here for free. If you like the delivery and like what you're learning, you can always move on to the different belts from there and learn more and more. This is primarily where I learn my technical analysis. The white belt, it does talk about support and resistances, supply and demand, some of the basic stuff to start with. And a lot of people make money just off that simple stuff too. So I would definitely recommend coming to Trade Devils University and check it out. You can find the link down in the description down below. If you learned something new, please give a like or subscribe. It really helps me out. And that's all I have for today. Trade safe, trade clarity. Take it easy. Later.